Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Monday, October 5th, 2020, just on the 5:30 p.m. Central Time. So we had a big up day in the metal markets. As you can see, the silver market, while it's down a nickel right here, 24.56. The gold closed over the 19.20 level, a large part of it due to the dollar in a pretty good-sized break today. Got down and closed 93.54, and as you can see, that was down 36.5 points. So what's going on is interest rates in the U.S. climbed. While they were down sharply today, they're down even more tonight, as you can see. We saw a big rally in the energy markets as people are hoping, the word is hoping, that there'll be some COVID relief and I'm talking an aid package for the U.S. They're also hoping that maybe, just maybe, things in the U.S. will get better and they'll get better in other parts of the world. What I did see is Nigeria's got an oil strike going on. I saw a number of wells offshore that were shut down there. And we're starting to lose production in different areas here as well. So maybe the world's getting a little more in balance. Who knows? But the rally today in the stocks, well, as you know, when we heard the president was going to Walter Reed Hospital, medical center there on Friday, it was obviously bleak, but it was after the market. So you didn't really get the impact of it. And today we hear he's coming out, might be out by about now, in fact, and the market views that as a very big positive. The polls are solidly showing that the president is losing, but you have to look at the makeup of the polls, and where the makeup is, as typically it is, 70-30 or other, in other words, 70% Democrat, 30% Republicans, according to different pollsters that analyze what's the makeup of it, well, the president would lose there. Those polls that are 50-50 show him winning. I don't know why you would do a poll 70-30, but I'm not a pollster, so what do I know? When we take a look at the gold market, we've had a break. The market bounced off that on the closing basis, the 18-week average of closes, and you get your bounce, and that's a close-only chart. When we come to a daily bar chart, you can see that the market's laboring to come back into the resistance right here. This was when the market was trading, and I think you'll agree, pretty much sideways action. You then had your breakdown, and we were talking, could you get into the top of that area? And you did. And now the market, as you can see, has come back and it's fighting this area. Very typical. So you pay attention to what that's doing. When you look at the swing line study, you have a pattern of higher lows and higher highs. Bullish. You had an outside day up today. And this is today's action right through here. Your high today was 1924.90, so you took out both the low and the high. If you take out the lows of today, on Tuesday or Wednesday, this would be a bull trap. Barring that not happening, the trend is up in these markets. So now the question is, where's the resistance? When I look at where the 18-day average of closes is, you're right at it. To maintain a bullish posture in the market needs to close over the 19.5 zone and maintain that. That would give you the bias up. So right now we have the swing line up. The market's at 19.1750. The bias is down intranight as the market is trading right here. When we look at Bollinger Bands, you would hit the combination of the 100-day average of closes in the Bollinger Band. I told you that that's where I thought the longer-term traders were going to just close their eyes, light their candles, and buy. Well, they don't look too bad. The market is now up for them $70 an ounce, approximately. The key is, can the market get over that 18-day average of closes and stay over it? And momentum is up. So I have the trend up, I have the bias fighting right here, and I have momentum up. Okay, not bad. The gold-silver ratio has run into resistance just around the 81 level, so it came from under here into the 70 level, back up to the 81, slipping back down. Supports around 76.87 if you look at an 18-day average of closes. When we go to the silver market, the market has got momentum pointing up. We have the trend up, but the bias is down. The first challenge of an 18-day average, should you get there at 25.03.5, is often a resistance zone. Again, I am and I said this as it was happening, I believe that the longer-term trader closed his eyes, bought the 100-day average of closes. He's got a neat lead. The market's from 21.85 roughly to nearly $3 higher. Not bad, and I'm glad that I mentioned that to you. You can see sometimes what the longer-term boys are doing. The problem on the longer-term charts is where do you put in stops? A lot of people, I'll call them the value investors. They'll step in and they go, I want to buy a market that's fallen roughly a third. And that's what this market did. It fell a third, exactly what I said when I was telling you this was going on. In the copper market, you have fought at the lower Bollinger Band. I'm still surprised the market even got that low. It's come back. It's still sitting here in the 296 area. This is the holiday week in China, so the Golden Week. So you really don't have any trade houses doing much of anything. So be aware the volume trade is normally down and demand factor from China is pretty much out of the marketplace right here. In the platinum market, you're right up into resistance. You're fighting between the 18-day average of closes in red, the 100-day, and this is classic what markets do. Now, any move in settlement over 909.30 is bullish. And I think the trade will go with that with stops under 880.70. Is there anything here that can turn the market bearish? There sure is. You had, and I'll come to today's action, you had an outside day up. Should you take out the low of an outside day up, and this is my rule, I've just gone back in charts and I see it work more times than not by a lot. If you take that out, prices often make a run to the closest moving average under the market. The two main ones are here, so that would put the Bollinger Band potentially in play. But it has to happen tomorrow or the day after. I don't care if it happens Thursday. That's not the rule. Resistance, right where the market ran to. It's done it now twice, actually almost 3 times, as you can see. Now the question is, can it punch through? When we come to the palladium market, as I've been saying, this is the strongest of the metal markets. It's acting the strongest. It stays the strongest. It's got the higher lows, higher highs. Reactions have fallen back to the 18-day average and held. Momentum up. Bias up, trend up. As I laughed and said over the weekend when I put it out, $33,000 margin per contract, that's what it is. But I think the pros were buying it, stops under these lows, looking to see if they could get the market up to the upper band, and that's still what I think's going on. As for the dollar, whether it holds or not, this bearishness that it just developed, it went into a downtrend today. You've got lower highs, lower lows, momentum down, bias down. I think the pros are short. I think they'll keep selling against the 18-day average. I think they take themselves out of the trade if you get over 94.09. And the ultimate goal, if you can keep the downtrend going, is 92.64. Keep in the back of your mind, we also get the Fed minutes this week. We talk about this and so much more from the Linn Group. We cover the markets all weekend. That's number one. You don't get that from many services. I look to see what they're putting out. Our traders, they get a whole host of information Saturday and Sunday. Our pros are writing it. We're sending them by email to our traders. You can access these in our charting software, and that could be both on your platform or your QT mobile as we have it. Everybody that has a subscription to my research, by the way, is entitled free to their quote to QT Mobile. That's about a $60 value a month. We just give it to them for free. You can start your free trial, and the word is free, by giving it a try to see how this fits in for you. Go to our website. You'll see all our offerings on the bottom right, Ira's free offerings. Take advantage of them. I'm Ira Epstein. I'll see you tomorrow.